Good afternoon, everyone. This is Christy with Van Ahn & Company. I'm going to go over the markets with you. It's Tuesday, July 19th. You had lower trade into these markets as you really started to sell off here late last night as the weather evening model came in to take a little bit of heat out of that 6 to 10 day forecast. So what you're looking at is we're definitely going to see the heat now for the next 3 or 4 days. But after that, we should get a little bit of a relief from here. Now still calling for below average chance at precipitation, but the heat backs off for a little bit. It is still in the 8 to 14 day forecast. The 8 to 14 day forecast is still hot and dry, but to give the crop a little bit of a breather, this market really saw that as beneficial and positive to crop conditions. And so you also came in here on Monday after the close with crop conditions unchanged in both corn and soybeans, and that was actually a little bit of a bearish situation too. So as those two came together, you found a bit of selling pressure that really started to build throughout the night trade into morning, and then really what pushed it and accelerated it lower was your midday model, left it unchanged. So yesterday you actually took and put that heat back in the midday model, and I think you saw traders waiting to see if you would see that heat come back in, but it didn't. And so that's what you had really accelerate that trade, with corn down 14 cents, beans down 38 cents, wheat down anywhere from 9 to 11 cents. You also had a much stronger dollar that put pressure on these commodities too, which I think was probably what caused the most issues into the cattle market. Live cattle, feeder cattle down just over $1. Lean hogs also a weaker tone there as you had the dollar up 52 cents. Now you have the dollar above $98 or $97 mark, which you're starting to have people talk a little bit about. Now is this the chance that it's going to approach close to 100 once again? And if that's the case, it is not good towards commodities. It does put pressure on these commodities as a whole as they become a little bit more expensive for foreign countries, and we might see a little bit of export demand start to back off there. Cattle market will be depending on cash trade moving forward. If we can get a little bit of a steady trade or even supportive trade there to help those futures out, otherwise you're continuing to see that pressure moving forward. What you're trading on the grain market, definitely weather news, seeing how hot these temperatures get over the next 2 or 3 days, and then also seeing if they change around that forecast at all. I do have to close with the disclaimer: trading in futures and options involves risk and loss and may not be suitable for all producers. Have a great day.